Hi everyone, and welcome to this very special webinar today where we're talking about everything that you need to know about investing in Brisbane and Southeast Queensland, which has obviously been in the spotlight of the media and certain pockets considered hotspots for quite some time. And to join me today to download everything and unpack it all for us is Melinda Jennison from Streamline Property. Thanks for joining me, Melinda.
Thanks so much for having me, Mike. It's really good to be here and hopefully share lots of info to help everybody that's tuned in.
Yes, everything that we need to know about investing in Brisbane, Southeast Queensland. Obviously, this is where your base, this is where your area of expertise is. For anyone that hasn't come across Melinda before, we'll get a little bit of a bio up here. So obviously the MD for Streamline, you're a buyer's agent, qualified property investment advisor, member of the Real Estate Buyers Agent Association of Australia, REBA,
Yes.
Property investor yourself. You purchased your first home in Brisbane at the age of 18. That's very impressive. And I like to describe you as a proper clever person because you've actually got a PhD. So we could call you Dr. Jennison. But some people do that. I mean, you're not a medical doctor, but a PhD, I think technically you're qualified to be Dr. Jennison.
Technically, that is the case. I prefer not to use that title because it's in an unrelated field, but it's the research capability that I've brought across to what I'm doing now.
Yeah, and that's what I think makes you so dangerous as a buyer's agent, is because that same academic rigor that is required to do a PhD, you're able to apply to the property market. So we're going to all be the beneficiaries of that today. So whilst we're waiting for people to jump in the room, I'll let you know what we're going to cover today. So we're going to do a tour of the region and have a look at the key pockets around Brisbane and Southeast Queensland and what makes them different. We're going to look at the history of capital growth in the city versus the regional areas. We're going to cast a spotlight on some of the so-called hotspots that you hear about all the time, or buyers agents certainly being active in places like Ipswich, Moreton Bay and Logan, and then just get a bit of a sense of who's active in the marketplace at the moment, who's buying, looking at the future of the Southeast Queensland property market. And there'll also be a chance to ask questions at the end as well. But feel free to ask any questions throughout the presentation, and we'll circle back on those where we can as well. So, Melinda, let's start, if you wouldn't mind, with a little bit of a tour of Southeast Queensland. So give us a bit of a lay of the land.
Look, this is a map of Southeast Queensland. Now, it's made up of 12 council regions or 12 local government areas, right up to the tip at Noosa. We all love Noosa, being a great holiday destination, and down to the south at the Gold Coast. Now, interestingly, Greater Brisbane, as it's often referred to, is made up of 8 of those council regions. So the only council regions that we drop out are Noosa, the Sunshine Coast, the Gold Coast and Toowoomba into the west. So the balance of those areas or local government areas make up Greater Brisbane, and that's according to that CoreLogic data that you'll be looking at on a monthly basis. So the CoreLogic hedonic home value index data that tracks Brisbane as a location will include those 8 council regions, and that's information that I did obtain directly from CoreLogic because, you know, data is a big part of what we do, and I love tracking data, and sometimes, you know, the data is not quite reflective of what we're seeing at a local level on the ground in Brisbane. Now, just to give you some perspective, Brisbane, or the CoreLogic monthly data, is made up of over 17,000 kilometres squared of area, whereas Brisbane as a local government area is just 7% or 7.5% of that total area. So it's really important for people to understand that when they're looking at Brisbane. Now,
that's crazy. That's a huge area. I mean, that's bigger than certain European countries. I'm almost certain. You have to fact check that one, but I believe that to be the case. So, I mean, I remember when you uncovered that fact, and that was sort of astounding because, you know, a lot of people are just looking at the CoreLogic data and go, oh, Brisbane's doing well, Brisbane's not doing well. But, you know, the scenic rim region to, say, inner Brisbane, they're completely different markets, right?
Absolutely, and I think what's important to highlight is that the population density in these locations is enormously different as well. Brisbane LGA has the highest population density, 8.5 people per hectare. That's the population density, but there's some of the larger regions with the lower population, like Somerset, have a population density of less than 0.04 per hectare. So you can see it's grotesquely different, and people need to understand that when we're interpreting the data to understand what it's made up of.
Yeah. So can you characterise these regions a little bit for us? I mean, the scenic rim, that sort of describes, I guess, what it is. That's a beautiful part of the world. But what are these regions like? What are they characterised by? How would you describe the market and the demographics of those little pockets?
I think between the scenic rim, Lockyer Valley and Somerset, they're largely, acreage type lifestyles. They're not typically what we would call metropolitan living. Most people refer to Greater Brisbane as the shires of Moreton Bay, Ipswich, Logan, Redlands and the Brisbane local government area. So they're probably the focus areas for the conversation today. Now, they are quite different in terms of the demographic makeup, as well as the affordability level from a housing perspective. So if we look at Logan first, there's a study that's just been released actually by the Logan City Council. It's called the Logan Housing Study, published in 2020. It's shown about 65% of the demographic there are owner-occupiers and the balance are investors. But one thing that report highlighted is that housing affordability is actually a growing concern in that region, and many families are actually experiencing housing stress. What's important to note, whilst the value of properties in the location is typically a lower level, housing stress is defined by the South East Queensland or Shaping South East Queensland Regional Plan, which was published in 2017. Housing stress is actually not only the cost of living, being the rental cost as a proportion of your income and the housing cost as a proportion of income, but it's also made up of the journey to work costs, because the further away from employment hubs that you live, the higher the cost it is to get to those employment hubs. So that's the definition of affordability according to, the Queensland government. So seeing people in Logan having a higher degree of mortgage stress is something that investors need to be concerned about. It's also an area where there's a higher degree of rental stress according to that housing study that was published by that City Council region. So it's just something that people need to be aware of. In terms of Ipswich, which is to the southwest of Brisbane, their council published an affordable housing forum review in 2017, which is the most recent information about what their housing market looks like. What that uncovered is that Ipswich has a very large proportion of their population which are an ageing population, so no longer income producing, but it typically gives an indication in terms of what the future housing demand needs to be, because as people get older, the type of dwelling that they're after does start to change.
Yes.
And they've also got a large proportion of very young residents as well. So a lower proportion of that income producing population group, which is interesting. Also very much lower levels of housing ownership in Ipswich. So only 55% of that population group are owner-occupiers. The balance are investors. So it is a hotspot for people looking to invest, and we'll get into the reasons why that is a little bit later. The other thing, Moreton Bay to the north, they last published a housing needs assessment back in 2011, so it's a little bit older than the other two council regions. But generally speaking, their population and demographic is a younger cohort. At the time of that study, which admittedly is 10 years ago, they identified that they had very concentrated areas where you've got an ageing population. That's Bribie Island and Redcliffe, and the balance of that shire as a whole typically are younger families that are double income producing sort of families. So the other thing with Moreton Bay that differentiates it a little bit from Ipswich and Logan is that they do have a higher proportion of families that have incomes over the $3,000 per week mark. So whilst the median values for each of those locations is similar, there is a higher swing in Moreton Bay towards higher income earners as well. So that gives you a bit of a snapshot of those three regions. And then Brisbane typically is where there are more people that are of the higher income earners, that obviously aligns with higher property values as well.
Yeah, beautiful. That, of course, all has implications for the market and the property growth potential. So, thank you for that whirlwind tour of the region. I mean, for someone that doesn't live in Queensland, it is a little bit of a mystery as to what's going on in all of those little regions, and I think something that interstate investors need to understand. Before we have a look at some of the historical growth of the regions, I wanted to put a little bit of a poll up to people just to get a bit of a sense of the room. Where are you at with your property investing right now? Are you actively looking for a property? Are you waiting to see what happens? Obviously, you couldn't blame anyone for that at the moment. Are you chasing finance or not necessarily in the market at the moment? We've got a couple of people saying that they're waiting to see. At the moment, I'll leave that poll up for a second. We'll jump into a bit of a historical review of performance in the city versus those regions, if that's all right, Melinda.
Absolutely. So all of this data has been taken from the REIQ market update, which was published just in September this year. So what we're looking at here is house price changes by local government area, which gives you an indication of which areas within Greater Brisbane are experiencing price change. Now, as you can see, we've got the quarterly change, which is the last 3 months. We've got the annual change, which is the last 12 months. And I am going to talk to some data that is the 10-year data as well. And I apologise that I didn't have time to put a graph together of this, but it only came through last night from fabulous Pauline, who helps us as an executive assistant. So as you can see there, Brisbane LGA has experienced the greatest price growth in terms of median values across the last 12 months. That's been followed by Logan, Moreton Bay, Ipswich with no change. And you can see there Redlands has had negative price growth of 1.9%. The quarterly data we need to treat with a degree of caution because it is based off low sales volumes, and therefore it's more important to understand what makes up that data as opposed to relying on a median value itself. But what I want to talk to is the fact that, you know, when we're investing in property, we're not investing for a 3-month period or a 12-month period. Most people invest in property for the long-term gains that will come as associated as an asset class. It is a long-term asset class. So I want to just talk to those points. So Brisbane local government area, the median change over the last 10 years in property values has been 35.62%. Now, of course, we're not going to compare that with Sydney and Melbourne. We have been in a different phase of our property price cycle. So that's something that we can talk about in terms of supply and demand a bit later. But so Brisbane, 35.62% growth. Moreton, 19.47% growth. Logan, 14.45% growth, and Ipswich 9.43% growth over the last 10 years. So it gives you an indication of which locations within Greater Brisbane have, at a local government area level, experienced the more significant growth. What is really important to highlight here is that you don't buy in a capital city, you don't buy in a local government area either, you actually buy in a suburb, and there's always going to be suburbs within all of these areas that are going to outperform and underperform. But as a general rule, if investors are wondering which areas are performing better over the longer term, I hope that's given a little bit of a snapshot in terms of that spread.
Yeah, absolutely. That's really illuminating. There's quite a disparity, certainly between Brisbane and Ipswich. That was a bit of a standout, as essentially, you know, less than 1% year on year over the 10-year period. So that's house prices. You've put together some info for units and townhouses as well.
Yes, and I don't have the 10-year change in the units and townhouses to share, but we do have the quarterly change and the annual change, as you can see here. What's striking in this data is what's actually happened in the Ipswich market. especially over the last 12-month period. So there's been a real decline in the value of townhouses and units in that local government area location. So Brisbane as a local government area, despite what you may be reading in the media around the oversupply issues, you can see there the unit and townhouse market has maintained its value, 1.9% up over the 12-month period, no change across the quarter. And Logan has seen some retraction, but Ipswich is the big underperformer there.
Yeah, that's a pretty stark difference there. What do you put that down to? I mean, you mentioned the percentage of homeowners versus renters in Ipswich. Is there anything that you can sort of pull apart as to why that's performed so badly in Ipswich?
Yeah, there's nothing that I can see in the data that indicates why this trend has been occurring. So then we have to not just look at the quantitative data, but potentially assess the qualitative indicators. And what that means is, we've got to look at what is that population looking for in a property to rent, or what is that population looking for in a property to buy. And I think because that area as a whole is more affordable, and you can still buy a house on its own lot, for a reasonable price compared with the cost of a unit or a townhouse. It's not the style of living that a lot of people want in that location, because there's so much land available that you can actually buy a house and land for not much more.
And let's have a look at vacant land. There's a nice little segue there.
Yeah, and this is a really good graph. I like looking at vacant land changes because when we're looking at property as an asset class, the land component is the component that appreciates over time, whereas the building depreciates. And Mike, you're the one that can talk to this, that's why we get depreciation schedules and things like that completed. So we want to make sure we're buying in a location where land values continue to grow. So you can see there across the quarter and the last 12 months for each of those local government regions, what has happened to vacant land sales. Now, there's been stimulus that's been put into this sector through the home builder stimulus and incentives for first home buyers, especially to build new. So that's got to be taken into consideration. But I'd like to just sort of break that down, because what's relevant with vacant land is not just what the median value is, which is what we're presenting in this graph, but more so what is the cost per square metre, because whilst it looks there like some areas might be performing in terms of vacant land growth based on the median value, what we've seen is that the median lot size has significantly decreased over time in a lot of these locations. So when we're looking at the median lot size, we've had a 20% decline in Brisbane over the last 10 years. We've had a 29% decline in size in Ipswich over the last 10 years. A 30% decline in size in Logan, and a 27% decline in size in Moreton Bay. And I shouldn't drop off Redlands when I'm talking here, 36% decline in the size of land in Redlands over the last 10 years. So how that sort of works on a per square metre basis is that Moreton Bay actually comes out on top. It's the number one performer. It's had 79% growth in the vacant land price on a square metre basis over the last 10 years, followed very closely by Brisbane local government area at 71% average price growth per square metre, and then 65% in Ipswich, 55% in Redlands, and 52% in Logan. So I apologise if it's very data-centric. I am a data person, so I do like to share the numbers, but what that tells us is that some regions of Greater Brisbane are performing better in terms of land price growth than other regions.
Yeah, that's fantastic data, and you've come to the right place for data. I'm a data nerd, of course. I think we both hit it off because we're introverts who love data, and there's not many safe places for people like us, but this is one. We're running the show. So the standout has obviously been Brisbane, I think Moreton Bay to a lesser extent, but Ipswich, Logan, Redlands, Moreton Bay, they're all very popular in the media and hotspots. And I want to I want to have a look at some of the reasons why you think that is. Before we do that, just some of the results of the poll. We've got 44% of people actively looking for a property, 22% waiting, 11% trying to get finance. That should hopefully be easier in the next few months.
Yeah.
22% of people not looking. I want to throw up another one just to get some nice audience participation. This is one that you were interested in, Melinda, and that is, let me publish that, pardon me. Why is Brisbane on your radar as an investor? Is it affordability, diversification, growth, yields, all the above, none of the above? Love to hear from you and get some insights in that. Now let's talk about these regions and why you think it is that these are attractive to property investors.
Yeah, we're in a very fortunate position that we get to talk to property investors a lot, not just local property investors, but also investors from interstate. So we know just through our own, qualitative research or the information that people share with us, that a lot of people are attracted to Brisbane on the back of affordability. They're priced out of other markets around Australia. So if we just bring up that median value graph, so this is the median values by the local government area here in Brisbane, and we've broken that down into houses and units. So you can see there, in Ipswich being the most affordable location for a house, the median value is around $350,000. And units, as cheap as 216 or 210 in Logan. So a lot of people that can't otherwise buy into the property market as an investor do look at some of these locations simply on the back of the fact that it's affordable for them as an investor.
Yeah.
But one thing that we get a lot is, people see that median data for Brisbane, which is published by CoreLogic, and remembering that is a huge segment of southeast Queensland that data represents. And our inquiry sees that the median value for Brisbane is around, Greater Brisbane is $525,000 for a house, and people will ring and say, look, I want to buy within 10 kilometres of CBD, and I want to buy something around $520,000 being the median value. And a lot of people are surprised when I explain to them that that's actually a very difficult target because, Brisbane as a local government area, as you can see there, has a median value of $694,000. So, the other thing that I talk about is Brisbane's not a radial city. We can't just pinpoint circumference, and look at a diameter around the city and say, well, if we're buying within this radius of the city, we're buying in good locations, because that's not, Brisbane's different. And there's a lot of areas that are within that geographical location that are heavily flood impacted, for example. So, it's not, we're very much a northern corridor, a southwestern corridor, and a southeastern corridor. And that's something that we highlight when we're talking with our investors in terms of location selection. So affordability, I think, definitely is one of the key reasons why people look at Brisbane. But the other section, and if we move on to the next graph, another thing that is attractive for people that are looking to buy an investment property in Brisbane is the gross rental yields that are achievable in our city. So as a whole, 4.4% for Greater Brisbane is what CoreLogic has published as being the gross rental yields. But as you can see, when we break that down by region, it does differ. This is for housing. On the blue columns, 3.2% is the Brisbane local government area as the median gross rental yields, but you can see there in the likes of Ipswich, you've got gross rental yields as high as 4.8%. Now that's a median value, don't forget. So we've got some properties that will be yielding much higher than that. And with interest rates so low right now, there's many opportunities where positive cash flow is highly achievable for investors in some of these locations. And you can also see that the unit market in Brisbane are much higher yielding asset class as well. But again, it's all got to be weighed up against an investor's profile because, unless you're chasing high cash flow and high yield only without the consideration of what the capital growth movement might be, then, you can sort of get held up as an investor in terms of achieving your long-term goals. So we're very mindful of helping investors understand what gross yields are important for them but also how that capital growth component needs to fit in to match and align with an investor's long-term goals.
I must say that it's very bewitching to see these low price of entry and high yielding sort of stuff. You can't blame investors for kind of zeroing in and saying, look at this, like I'll go back to the previous slide. We can get into Ipswich for a house, in the mid 300s, and then we're going to get 4-5% return for the houses, and perhaps even better in Logan if we're getting a unit and it's cheaper. But I know, having interviewed a number of people that call themselves sort of cash flow people, well, their understanding of cash flow is that, yes, it's critically important to be able to manage and grow your portfolio, but they themselves say it's not what made them wealthy or will make them wealthy. That's something that I assume you deal with a bit with your inquiry.
Yeah, look, as a qualified property investment advisor, we're always looking for the right strategy that matches an investor's profile. So, we've had inquiry from very high income earners, for example, and they're buying a property in their own name, and they say, well, I want to buy a dual income property. I want to maximize my cash flow. And it's important for us to highlight what the consequences of that might be, because, they also usually tell me that they want to achieve, a passive income in a certain number of years and all the rest of it. Now, there's two sides to investing. There's rental yield and there's capital growth. And if you're chasing rental yield at the compromise of capital growth, then that can potentially slow you down in achieving your longer term goals. Remembering every dollar that you earn on a property over and above the cost to hold that property will be taxed at your marginal tax rate. So some strategies work very well for some investors and not for others. And it's really important that people don't assume that property investing is a one size fits all thing, because it really is not. And, some strategies are much more effective for people that, are chasing cash flow, compared with, strategies that are more sophisticated for people that might be on much higher incomes and therefore have the ability to offset some holding costs for future capital growth.
Yeah, and I guess whether you're interested in growth or cash flow or both, affordability is definitely something that's put Brisbane and Southeast Queensland on the radar of investors, and our poll sort of bears that out as well. 33% of people saying that Brisbane's on their radar for affordability, 33% for growth prospects. High yield, 0%. So we don't have yield chasers in the room at the moment. And there's a bit of all of the above there as well. Yeah. So I mentioned before that as someone that lives interstate from Brisbane, it's difficult to understand exactly the lay of the land. So I wanted to ask you what are really interstate investors, or maybe even locals that don't quite understand some of the risks associated, what do we need to be aware of?
Look, like any property market, local knowledge is critical, and understanding the things that can impact a property need to be, researched, and due diligence needs to be conducted up front. So there's a certain amount of due diligence, which I'll cover, and it's also understanding the local drivers of supply and demand, and that's what typically will drive rental price growth and capital growth for an investor over time. So the first thing with Brisbane, and it's definitely reflective of the concern we get from our inquiry, is flood. We are built on a flood map, on a floodplain, sorry. The Brisbane River has broken its banks several times in the past. Now, we did have a dam that was built back in after the floods in the 70s, and that dam was meant to mitigate any future risk. But as we know, in 2011, we had a significant flood event that really impacted the lives of a lot of people that live in Brisbane. And, I was part of that mud army that went and, helped friends who had floodwaters up to the ceiling. Now, that's not something that, we want to experience. And as a property investor, it's critical that you know about those types of impacts. Now, Brisbane may never flood to that extent again, but it also might. And so as an investor, if you're considering investing in a flood-prone area, it's just important that you understand what that risk is. If a property has previously been flood impacted as well, it's critical that you get that property thoroughly investigated, because there could still be moisture in the walls. It could create a future mold issue or a rot issue. So there's a lot more due diligence that needs to go into location selection and therefore property selection as well. So you can see there, that's just the Brisbane River and some of the flood mapping. But if we were to zoom in on that map, you would see that a lot of that flood impact does cover a lot of residential areas. So it's critical for investors to understand that, because some insurance providers just won't provide cover for flood impacted properties, and others will have that cover, but you will be paying much higher premiums as an investor. So that's going to impact on your net yield.
Yeah, that's a really key thing in Brisbane. And we are going to talk about land supply, but this map sort of really gives you a nice eagle view to see where the potential housing estates or land releases could be as well. You see there's some mountains to the northwest. That's probably off limits, but quite a few pockets around Logan and Redland. Another thing that you kindly put together for as part of your extensive research was projected population distributions. And this one, straight away, we can see Southeast Queensland's got some stuff going on.
Yeah, look, I think things have, been halted because of what's been going on more recently. But, once the borders open, I know our inquiry from people looking to relocate from, especially from Melbourne, wanting to get out of lockdown, they are looking to relocate to Brisbane. And our inquiry itself has been indicative of this type of trend. So initially I thought, this is all just people talking, but it's actually happening, and it is reflective in our inquiry. But this is part of the Shaping Southeast Queensland, which is the state government's regional plan back in 2017, and they projected where that population is going to be distributed within each of the local government areas. So that might be a bit hard to see, because there's a lot of detail on that graph. But on the far left, that's the Brisbane local government area, and then we've got Gold Coast, the next one in, followed by Ipswich, the Lockyer Valley, and then Logan, Moreton Bay, and then moving across Sunshine Coast is the second or the third from the right-hand side. So what that shows is that the majority of Southeast Queensland's future population growth will come into Brisbane, the Gold Coast, Ipswich, Logan, Moreton Bay, and the Sunshine Coast regions. Much smaller proportion into Redland. So that's why we're focusing on those areas from an investment perspective. This alone, population growth alone, will not drive property values. Now, I know that there's a lot of developers, for example, that will say, hey, this is a high growth corridor, great place to invest. Generally, they're talking about population growth. Population growth alone is only one component that makes up the demand for property. There's so many other components that need to be, considered alongside that. And of course, when we're considering price movement, whether that's up or down, population growth needs to be considered very closely alongside supply. What is the future supply like? Because if we've got high population growth, but a very high pipeline of future supply of new dwellings, then we're not going to see that significant price growth that we're looking for as property investors, because the supply pipeline simply keeps up with the population growth and property prices don't change at all.
Let's talk about supply.
So this future land supply for Southeast Queensland, this is a heat map that I've found, which again is published by the state government. So what this shows, the pink areas are urban areas that are already populated. The dark red and the maroon areas, if you like, are areas where the future land supply sits. So this is typically the greenfield land that's going to be developed into new estates. So if we're looking north, Caboolture West is the largest region where there's available future land. I think this map also provides a really good example of how we talk about Brisbane being not a radial city. We've got this northern corridor, this southwestern corridor, and this southeastern corridor, and that graph really shows that based on the urban footprint. But you can see down in the Ipswich and the Logan regions, there's a lot of red and there's a lot of dark maroon. So in the most recent publication from the Logan City Council, which was that housing study that we talked about a little bit earlier, and this has just been a media release this week, they're predicting 56,000 new dwellings by 2036 in the Logan Council region. So remember, if we look back to the population distribution, we need to consider So there for Logan, you can see that there's going to be growth in population. I haven't done the calculations of the difference there, but between 2016 and 2041, that's a population growth, but the future supply is 56,000 dwellings by 2036. And in fact, the Queensland government have also done broad hectare land studies, which were published back in 2019. And they actually showed that the capacity for Logan is actually 123,100 future dwellings. So wow. 56,000 in the next, 15, 16 years, and then the balance, in the years ahead of that. So there's a lot of land supply coming there. And in fact, that's 30% of Southeast Queensland's future land supply, according to that Queensland government broad hectare land study. If we look at Ipswich, the government study shows 111,600 future dwellings, and that's 28% of Southeast Queensland's future supply. And Gold Coast, although we're not specifically focusing on Gold Coast, but the northern part of the Gold Coast is also going to produce over 63,000 new lots, and that's about 15% of Southeast Queensland's future land supply. Now, I talk about this a lot when I'm talking with investors. It's a total of 73% if we add up those three locations, being Ipswich, Logan and the northern corridor of the Gold Coast, 73% of Southeast Queensland's future land supply. So when we know that it's a growth corridor in terms of population growth as well, so those homes are needed, but we just need to weigh up how many people are moving to that region versus this supply provision, so that we can understand the uptake to know which way property values are moving. Compare that with the Moreton Bay region, and the Queensland government broad hectare studies show they've only got future supply for about 27,000 dwellings. So big difference in the northern corridor compared to the southwestern and the southeastern corridors.
That's very interesting. And yes, as you say, those places are needed, but property prices will grow better if the supply is not meeting the demand. I mean, I haven't studied economics, but everyone can sort of understand how that works. So yes, like we're not talking about them building houses that people aren't going to buy, but there's not going to be as much competition if there's a steady flow of houses to meet the people wanting to buy them, of course.
Absolutely, yeah. And I think what we've talked about typically is that broad hectare land being subdivided into single lots and new houses being built on that. Obviously, supply can also come in higher density living in terms of, units and townhouses and infill development as well. And if we move to the next slide, this will help some of our viewers to understand what type of supply is likely to come to each of the regions in Greater Brisbane. So Redlands, the dark section there, 73% of their future supply is through consolidation, which is infill development. So, replacing existing dwellings with higher density living. Yep. Balance is there in expansion, which is broad hectare land being subdivided into new lots and new estates. Moreton Bay, consolidation at 55%, and I'm not wearing my glasses, but I think that's what that number says. And then the expansion or broad hectare land being 45%. Now, Brisbane City as a local government region, obviously there's not much spare land left to be developed as broad hectare land. So the majority, 94% of our future development is going to be infill development, and that's where there's opportunity for investors to lock in these properties that have that future development potential, because it will happen. It's not a case of if, it's when. And then Ipswich, you can see how it all changes for Ipswich and Logan. And we've got Ipswich with 75% of future supply being broad hectare land, and Logan with 78% of future supply being broad hectare land. So whatever you're buying as an investor in these locations needs to be considered against what the future supply of a typical comparative product is likely to be. And you can see in Logan and Ipswich, there's a lot of future supply of house and land packages in those regions, and that's something that investors need to be aware of if they are investing in those locations.
It's really showcasing the value of a buyer's agent with a research background as well. I mean, as much as I love data, it's sort of it's specific to my trade craft, I guess. And this sort of stuff, it's like, wow, like I could see how an interstate investor could be looking at, oh, look, this looks good from a numbers point of view, but looking into what's likely to happen in the future has a huge impact on your potential gains. Let's talk about commute time, because we've learned a little bit about the corridors, and it's very, very different to many other capital cities that sort of work in a bit more of a donut shape. What can we learn from the commute times and property?
So obviously, because a lot of our population growth in southeast Queensland will be coming into areas outside of the Brisbane local government area, especially for those new estates in the house and land package type of product, we need to consider where the employment hubs are, because that's another contributor to the demand for property, and therefore, you know, it can impact on property values going up or down. So one thing that this graph or this illustration highlights is that 42% of people working in Brisbane right now are currently commuting from nearby local government regions, and you can see the breakdown there. So that's obviously something that needs to be considered, because if we refer back to what I mentioned previously about the Queensland government's definition of affordability, when we're considering not just the cost of housing but the cost of transportation to these employment hubs, obviously that needs to be considered. It's all good and well to buy an affordable home, but if you're out in the sticks and it's, you know, an hour and a half commute each day to get to employment, that's not going to be a high demand location.
Yeah.
So the other thing that I found out is that approximately 90% of these commuters that are currently moving from other council regions into Brisbane for employment are driving, using their vehicle at the moment. Now, anyone that knows Brisbane knows that the M1 that converts into the M3 from Gold Coast to Brisbane can be a car park. The Sunshine Coast Bruce Highway can be a car park. I know a lot of people say, oh, you know, these places are just an hour up or an hour down the coast. Yeah, they are when there's no traffic. But when there's traffic, this commute can actually extend well beyond the 1 hour commute, and people need to be aware of that. The other thing is the Western or the Centenary Freeway that heads from Brisbane to Ipswich. It can be a car park as well. You know, my boys go to school over that way, and I know that any events after school and you're sitting on that Centenary Highway and you're not moving, it can be a real frustration for people. So it needs to be considered. Public transport corridors therefore become really relevant, because in the future we will have to rely on public transport. You saw those population projections that were made in that previous graph, so we can see how many more people are coming. We just can't afford for the roads to continue to get more congested, or we'll end up like Sydney and Melbourne. And we really need to rely on those public transport corridors.
The only beneficiary of people sitting in cars is people that run podcasts, and thankfully I've got one, and you do as well, which is a great listen, and we've both been guests on each other's one, so definitely check that out. But yeah, that's an interesting graphic there, and I must admit I've had plenty of trips between Gold Coast and Brisbane, and if you're going in the right direction, it's dizzying ecstasy of gliding along as you see the car park going the other way. If you're on the receiving end, it's a very frustrating and long journey as well. If anyone's had some really aha moments, I'd love to hear from you in the chat. Anything that Melinda's shared so far that you've really got something out of. If you've got any questions as well, we will have a Q&A section, but feel free to plug some stuff in the comments there. I want to ask you about what's happening at the moment. Who are the people active in the market? Who's buying?
Look, it's been an interesting trend over the last few months, given the world that we're now living in, and investors literally dropped out of the market for a number of months, and home buyers were really driving the Brisbane market, certainly up until more recently. I would say that probably more than 90% of the market activity was driven by home buyers up until maybe 6 or 8 weeks ago. What we've seen is a slight shift again, and I think that's in line with the improvements in consumer sentiment, and investors are actually starting to come back into the market. So, you know, where are these people coming from? Home buyers, they're locals, they're upgrading because the cost of finance is so cheap at the moment, and a lot of people that are in high-paying jobs that are secure, who are not being impacted by the current recession, it's easy access to finance for them, and they are looking to upgrade. We've got inquiry, as I mentioned earlier, from interstate people looking to relocate to Brisbane as well, and expats also looking to relocate back to Brisbane. So they're all the home buyers. That said, as I mentioned, investors are now starting to come back into the market and, driven by the affordability, the yields, and also the more positive sentiment about Brisbane in the media. Media is an amazing thing. It'll either drive the market down or up, depending on what they say on a particular day. But, when the Westpac CEO came out about 3 or 4 weeks ago and said Brisbane property values are set to rise 20% between 2022 and 2023, our phones started ringing. So it's amazing to see how much, the consumer sentiment aligns with what the media messaging is. Despite that, our messaging throughout all of the last few months has been Brisbane is stable, Brisbane is strong, the buyer depth is huge. It is a strong seller's market. There's limited listings available, and we don't see any risk of property prices falling.
Yeah, awesome. I mean, yeah, that's the media is something I've come to learn a little bit more about in the last year or so, I've got to say, and it should be treated with caution and a grain of salt for anything property related. Preeth has just shared in the chat that she's it was a great overview and very intensive and detailed, which is fantastic. Thank you for the effort that you've put into that, Melinda. Very useful data, much appreciated. She's loving it. Anyone else out there, if you can let us know what you've got out of the presentation so far, and if you've got any questions, please feel free to chuck them through. We'll move to the Q&A section in a minute. I just wanted to chuck up another poll while I've got the opportunity. When you're going to invest in Brisbane, are you chasing capital growth, cash flow, both? Unsure. We got a bit of an insight that we weren't sort of necessarily chasing cash flow too much, but I'd love to sort of touch base with people again just to see what's on their agenda. Now, before we move into the questions, I want to ask for your crystal ball, which surely is in a cupboard there behind you somewhere. Everyone sort of hates this question, but what I want to focus on is let's look at things like the housing versus the unit market in Brisbane. There's been a lot of media about units in the city and an oversupply, and we've got a few unusual things happening with JobKeeper and JobSeeker sort of winding down, the mortgage deferrals and that sort of thing, although that seems like it's a bit of a media beat up. What do you think's in store for property in the greater Brisbane and Brisbane city areas in the next little while?
Oh, gee, it's a great question. It's a question that I get asked and most new inquiry, to be honest, because people are genuinely interested to know what my thoughts are about which way we might be heading and what is the risk of, forced selling, and can I grab a bargain in Brisbane when all of these forced sellers come to the market? My response is fairly consistent. And in terms of, the housing market, let's start with that. Right now in Brisbane, what we're seeing on the ground is, the buyer depth is huge. We were at an auction 2.5 weeks ago now, 13 registered bidders sold under the hammer. That means 12 bidders missed out, still in the market. There was another auction we didn't attend, but it was vacant land in an inner northern suburb. Vacant land, no house, at 38 registered bidders. 37 people missed out on that property, still in the market to buy. These stories are not uncommon, and anything that we have purchased in the last probably 3 or 4 months, since mid-April, early May, it's when the market started to pick up. Everything that comes to the market that is a desirable home in a good location seems to be selling under multiple offer. The only time it's not a multiple offer situation is if it's off market, and obviously that's where we add value as buyers agents. Now, what that means is that there's not enough properties to buy, but there's so many buyers looking to buy. So even if we see some distressed sellers coming to the market in the future, at this stage in the locations that we're active in within Brisbane, and just for transparency, we are only active in the Brisbane local government area and certain pockets within Moreton Bay. So I'm not speaking generally about what's happening on the ground in Logan and Ipswich and Redlands at this stage. But what we're seeing in the locations we are active in is that we would welcome some more supply to the market, and not off the back of distressed selling, of course, but there's no opportunity for bargain hunters in Brisbane in the areas that we're buying, because if you're going in with lowball offers, there's 10 other people that will come in with a fair offer above you. So, even off market, people know the value of their properties, so they're not going to be accepting a bargain price. Units, I think there's definitely been some short-term risk for investors because the vacancy rate did spike off the back of COVID-19. We saw vacancy rates in high-density units in Brisbane CBD upward of 14% at the peak. They are starting to trend downwards again, but they're still hovering around 10% vacancy, which for an investor is huge risk to cash flow. So whilst we looked at the gross rental yields that are achievable, we've always got to lay that with what's happening in terms of vacancy rates in a particular location. That said, the housing sector in terms of the rental market is a very safe space. A lot of locations throughout Greater Brisbane currently have vacancy rates less than 1.5%. And when we're looking at a suburb level, there are some properties that have vacancy rates less than 0.5%. One example, a property that we purchased for a client that just settled on Tuesday, first open listing for rent was yesterday. They had 6 offers from tenants. It was listed for $520 per week. They actually secured a tenant who is willing to pay $580 per week simply because supply and demand. Not enough properties in a suburb where vacancy rates are currently 0.5%, too many renters looking for homes, and so people will pay a higher amount just to secure a property. This is the dynamic of property supply and demand. It all comes down to that.
Yeah, wow, that's amazing, and good luck to that property investor there. They've got a pretty in-demand asset. We've got a great comment from Jai saying some very relevant information, especially for people looking to move from Melbourne. Lan, who I believe is a client of ours here at MCG, she'd love some advice on finding capital growth in Brisbane from an expert like Melinda. She's got some properties in Ipswich and Brassall that are more on the cash flow side of things. And yes, you definitely can rewatch this recording because I know you jumped on a little bit late because you were on a bit of a work thing there. So yes, it'll be recorded and sent out to you. So I want to move into the Q&A section. So if anyone's got any questions for Melinda on anything that we've covered and anything perhaps that we haven't covered that she's an expert in, all bets are off there. You can ask her whatever you like. Before as I wait for a couple of questions there, circling back on the poll, when investing in Brisbane, is your main priority capital growth or cash flow? 37% of people are saying capital growth. That's now changed. 33% saying capital growth and 66% saying both. So we've got 2/3 of people really saying that both are important, whereas 1/3 are saying it's capital growth and I don't care about the rent. I'm paraphrasing there, of course. So if anyone's got any questions for Melinda, feel free to chuck them through. Thanks for the kind comments there, Lan. I want to leave it open for a moment in case anybody is being shy and has a question for you, Melinda. But from my own perspective, I'm very sort of interested personally about sort of houses in Brisbane. Obviously, there's no housing estates going in the Brisbane sort of area. The median house price is quite high. What's the demand like for tenants in the greater, or I should say, the Brisbane CBD? Do most people really covet a house if they can afford it, or is the demand more for units? Do people want to live in units if they're working in the city?
It's a good question, and typically our lifestyle here in Brisbane is a very outdoor lifestyle, a back deck and a barbecue. We haven't transitioned to the unit style of living as easily as other capitals like Melbourne and Sydney. Now, I think that's also a demographic or a generational type of thing. So let's just say I'm no longer considered the younger cohort of the demographic. So I would be sitting in the middle-aged cohort, I guess you could say. And, our demographic typically likes to live in our own home with a backyard and have our friends around to our home. I think that there may be a generational shift in that the younger cohort of people that are coming through may be more accepting of that type of lifestyle. And I certainly know that some first-time home buyers do prefer to target units because they are wanting to accept some more convenience of, rather than living in these new house and land estates that are on the transport corridors that are so far away from the CBD and the employment hubs. So I think it's a personal preference. As a general rule, we haven't taken to unit living in the same way as Sydney and Melbourne, but, you know, in time that could change.
Yeah, it'll be interesting to see, and I think you're right from what I've observed, which is a bit of an outsider. There isn't the same demand for units as there is in some of the other cities. Jai has asked Melinda, what suburbs or areas of Moreton Bay are currently the hotspots? Which sort of pockets would you be looking at in that region?
Gee, that's a cheeky question, because that sort of information is generally reserved for our clients. Look, when you're looking at Moreton Bay, you know, I encourage people to have a look at the employment hubs. Now, there's a number of employment hubs within Moreton Bay, and also the transport corridors. So, you know, we all know that there is the university precinct. There's a priority development area in and around Petrie, where the University of the Sunshine Coast did open this year. There's a lot more development planned for that region and that location. There's a huge area of industrial job creation in and around North Lakes, spanning to the north. And Brendale and Strathpine also have a corridor where there's a lot of industrial activity in terms of job creation as well. I just encourage investors to look at where the jobs are and look at where the transport corridors are to determine location. And then, of course, weigh out what the capital growth versus the yield return might be on a particular property. I'd love to say, hey, here are the suburbs that we would be targeting, but I don't want to create my own competition either, do I?
No, you've got to get in touch, sign an agreement. Richard's asking, generally speaking, are renters after pools in the rental properties in the areas where we've been discussing? He's heard that these can be quite expensive to maintain for investors. Well, I know that certainly can be true. There aren't a lot of properties that we do tax depreciation schedules on, which are obviously always rented properties that have pools. I don't actually have that data because I think it's so tiny. But what are your insights on that, Melinda?
It's a great question, and I actually think, you know, here in Queensland, young families, they love a pool. So, you know, a tenant maybe will pay more for the convenience of a pool if you do have that in an investment property. That said, the tenant has to be able to afford to pay more for the convenience of a pool. So generally speaking, executive rentals, for example, and I'm talking in the Brisbane local government area, high-end homes that, you know, are renting for over $1,000 or $1,200 per week. That's what people want. That's what those tenants demand. When you're talking about locations where the rent is, you know, $350 or $400 a week, are those tenants going to pay more for the convenience of a pool? Because as a landlord, it does increase your costs to hold. You need to pay for pool maintenance and you know, servicing and chemicals for the pool, unless you're charging that onto a tenant. I think generally speaking, in the lower price points, fans and air conditioning are typically what tenants desire more so than a pool. So you just have to weigh out where the property is located and who the demographic is of who's going to be renting that property to see whether they would actually pay more for that pool or not.
Yeah, I think that's really great advice. It really depends on the demographic. Now, if anyone's sitting there with itchy fingers, I'll give you a little tiny bit of amount of time to just get a question in before the buzzer. But I want to take this opportunity to thank you, Melinda, for the effort that you've put into the webinar presentation today. Obviously, you've crunched a lot of data. I've learned a tremendous amount. I think this is such an awesome oversight or overview for anyone that's wanting to familiarize themselves with the market. And I think even for locals, there's so much information that you shared about the future of the region. Thank you very much for coming on. It's been a real pleasure to have you.
You're very welcome. This is what I do. I love researching, and you know, as I mentioned to you before we started to record, I actually learnt some additional things as a result of researching for this presentation. So, you know, if anyone is interested in understanding at a suburb level what is actually going on in all of these pockets, then they're welcome to reach out at any time. Beautiful.
Peter has snuck one in on the buzzer, so we'll go to Peter's question. He said, not all LGAs are in favour of dual key properties. Some have ridiculous requirements in order to reduce their numbers. Can you give your opinion of those?
I'm glad you asked this question, actually, because this is something that is topical right now. Brisbane, the Brisbane local government area has very different rules in comparison to the other locations that we've discussed today. In terms of granny flats and dual keys, you do need council approval for those as a duplex, and you need specific zoning in order to rent those types of properties in Brisbane City Council under separate tenancy agreements. So it's not a way that you can actually improve your cash flow in Brisbane. Moreton Bay is currently under review. I urge investors to proceed with caution if they're looking for the likes of a granny flat strategy in Moreton Bay. Dual occupancy is assessed differently in the Moreton Bay region, and really it's making sure that you get the council approvals up front and don't just assume that a property that has the capacity for dual living can actually be used legally in that way. We just recorded an episode on our podcast, the Brisbane Property Podcast, that covers this in a lot more detail, and I'm conscious of time, and that actually goes up today. So if anyone is interested in having a deep dive into this question, I encourage you to have a look at that. At the moment, Ipswich and Logan are the two shires that people tend to go to for the dual occupancy or the granny flat type of strategy. So again, it's all relative to the council region and what their local rules are in terms of town planning permissions. Yeah.
Beautiful. There you go, Peter, and check out Brisbane Property Podcast for some more info on that. That's some very serendipitous timing there, Melinda. Well done. All right, well, we'll leave it there. Thank you very much, everyone, for jumping on board. Thank you for the questions and the comments. It's been great. And thanks again, Melinda. I've certainly learned a lot, and I hope to speak to you again soon.
Great. Thanks for having me, Mike. See you later.
Cheers.